Get to an earnings mover this morning. Albertsons, second quarter results with a beat. Digital up 243% as customers stay home and shop for essential supplies online. Joining us this morning in a first on CNBC interview is Albertsons CEO Vivek Sankaran. Vivek, welcome back. Good to see you.
Hey, Carl, good morning. Good to see you.
Quarter had a lot, just something for everybody. Sales up 13.8. We mentioned digital, a little buyback edition. And you see comps for the year up better than 15. Give us a picture of the environment right now, given what we already know about how the grocery business has changed.
Yeah, Carl, first, thanks for that. You're right. It's a sound beat on just about every dimension this quarter. And I think it goes back to we're in the 8th month of this pandemic, and we're starting to see some behaviors that are becoming entrenched. Customers are eating more at home. They're coming less often, but shopping a full basket, making a one-stop shop. It's centered around fresh, and it's centered around having the full variety in a store. And that's helping us significantly. And we continue to innovate around that. And that's what you're seeing, Carl.
We mentioned digital. Can you give investors a picture of what's been behind, at least in terms of investment, behind that push that apparently, I guess you would argue, is now paying off?
That's right, Carl. There's two types of things we're doing. One is we're expanding what's called Drive Up and Go. It's the fastest growing piece of our digital business. So customers want to order in a store they're very familiar with because they go in there every so often and know that it's high quality product. And then they want to just have the convenience of staying in a parking spot and having the product brought. That's growing fast. We're going to expand that. We're going to expand that to 1,800 stores. We thought it was going to be 1,600. We're going even faster between this year and next year. So that's one. The second thing we're excited about is what we call a micro-fulfillment center. And these micro-fulfillment centers, think about those as automation that might sit attached to a store that quickly helps us pick things much faster so we can reduce the cycle time of the order from the time she places the order, the time she gets the delivery or picks up. And I think those two are driving forces. People are looking for the convenience of e-commerce and looking for it in many ways, and we're offering all of those.
All right, Vivek, Jim, I've been a huge supporter of your stock since it came public. I think it's inexpensive. But I want this Barclays question answered because when you get the people who, let's say, maybe not understand the story, a lot of people who buy the stock will be better armed. Share gains are not sustainable considering pricing that remains well above the competition. True or false?
Well, share gains are a factor of multiple things. I always look for share gains not on dollars, Jim, but on units. And when you have good gross margins and you're gaining unit share, that means something in the formula is working, right? And the formula that's working for us is the fresh assortment we have. When you have somebody eating at home, you want great fresh assortment. And with yes, you can compare prices of many things, but when it comes to fresh, quality matters. And that's the advantage we're seeing, and we're building and doubling down on it. We think it's incredibly sustainable.
Okay, let's get to, I know you're also acquiring Kings. That's my supermarket. A lot of great fresh things at Kings that are no longer really palatable in an era of COVID. How do you treat what I thought was really the finest part of Kings, the stuff that was being made an hour before I picked it up?
I'll tell you why we're excited about that acquisition, Jim. It is accretive from day one. Okay, we got it for such a great multiple. It's accretive from day one, even where our stock's trading. And second, we learn a lot from Kings, but we can also bring a lot to Kings and Balducci's, especially in the back end. And the nice thing it gives us another premium banner, like we have Hagen's or Pavilions. And it gives us a group of premium banners where we can learn across the company on merchandising. It's a fabulous tuck-in acquisition, both financially and from a strategy and merchandising standpoint.
Finally, Vivek, we've heard from some other retailers. Walmart was an example last week where they said in communities where we're starting to see a resurgence of COVID cases, there is the hint of the kind of bulk purchasing that we saw in the early spring. Does that ring true to you?
A little bit, but I'm very hopeful, Carl. We're seeing steadiness. I'm seeing steadiness in demand, a similar pattern established by our customers. And I'm hopeful that even if the pandemic gets worse as we go into the fall, that there won't be that kind of a rush we saw. Because there doesn't need to be that kind of a rush. There's plenty of supply, and we're preparing for it. We're preparing that people might come in and want to stock up again, but we're preparing for the holidays when we think there'll be a lot more consumption at home than in the past.
Sure. Vivek, thanks for being with us as always. Stock up 5%. As you can see, that's going to take you back to early August.
Shepard Smith here. Thanks for watching CNBC on YouTube.